FOMC. Yep. That's what we got going off today, ladies and gentlemen. It's the biggest day in the financial world. Whenever a bank decides to increase or decrease its interest rates, anyone in finance is going to pay attention. So what have we got going off today? Well, we actually have the FOMC press conference with dearly beloved Jerome Powell again. And I think he's going to get a few questions asked to him, given that inflation has now popped its head back up again. So I think it's going to be a lot of... I think he's going to be very snappy in today's live stream. That's what I'm expecting from Jerome Powell. But listen, if you are new passing through to this live stream right now, make sure you subscribe because we'll be live again this evening for the FOMC event itself. I'm going to be going live around 6:30 UK time. So about 30 minutes before the actual FOMC projections and the actual policy rate change. And then we'll have, of course, the FOMC press conference, which will be 30 minutes later, which I'll spend a bit of time going through certain assets that you might want me to look at, various altcoins and what have you. So it's going to be a big live. It really is. But it's going to dictate what we are going to see happening going into the end of the year and the new year, because that's what it's all about. Expectations from the market are that if Powell does not give anyone the idea that the Fed's going to be continuing to cut interest rates in 2025, then that could be a bit of a problem for the marketplace. As it stands, we are going to get a 25 basis point cut to bring interest rates down to 4.5% in the US. That means the US is still deemed as the better yield investment for foreign investors. Banks like the UK, the Eurozone, Canada, they're all, Australia, they're cutting their interest rates. The US is a little bit reluctant to do so, but inflation came up in the UK unexpectedly, and it's done the same thing for the US as well. So tonight's live stream, or should I say the FOMC press conference itself, is going to be a very important one. After that, we then see what happens with the marketplace, and then we go into the Bank of Japan's press conference, which word on the street says they actually might not cut their rates. Or should I say, sorry, they might not actually increase their rates. They might actually hold. That really gives opportunity for assets to appreciate, because then the carry traders have nothing to worry about having to get rid of exposure in dollar. So let's break it all down on what we can expect going into today, guys. Mad love and respect to everyone passing through. I hope you're all doing well today. So let's just work out what madness will unfold. All right, here we go. So I spoke about this morning to the Platinum members, and this is really important to understand, and it could be giving us the scope on what we could be going into today. You see, usually when you see the bonds going up, normally you want to see high-risk assets like the NASDAQ, stock markets, and stocks themselves. You want to see those going up as well, because it effectively means that investors are looking for low risk and high risk. But sometimes the bond markets represent safety, or they just want low risk. They don't want to take on high risk. Now, this article here goes on to say that JP Morgan's Treasury Client Positioning Survey shows that most of them are long on treasuries, okay? Very few are playing the shorts game. And overall, there is an expectation that people are favoring bonds. So they might want to start going into lower risk environments, because they might not be expecting volatility, or should I say high risk assets, to generate a decent return. So they're going into assets like the bonds markets or ETFs like the TLT and what have you. Okay. Going further down here, it does go on to say about what's been going on with hedge fund managers. It says here that hedge fund managers, asset managers, have been buying to cover, effectively closing off their shorts in the bonds market. Okay. And it says here that approximately 65,000 10-year note future equivalents on net short positions across the future strip. So they closed them off. Okay. So they covered. All right. So when you close a short, you are covering. All right. Which behind that is like a buy. All right. So when we're seeing the futures aspect of it all, it tells us that if they're closing off their shorts, that could be that they expect prices of the bonds market to go up. We go and have a look at the bonds market itself, and we can see that bonds are actually trading below 98.24. And if this actually comes into fruition, then we would assume that the Federal Reserve announcement today could lead the bonds up. So what event would lead the bonds to go up? Well, the word on the street is that there could be a hawkish tone coming from Powell today. But they've also said that regardless of whatever is said, we're still getting a rate cut. So the market short term might actually react positively to whatever Powell says. But the market's looking for what it's going to look like in 2025. Now, if Powell comes out as hawkish, it means that they might not be cutting interest rates in the future, and the market will price that in now. If he turns around and says, we're going to cut interest rates probably to the sum of a full basis point, then the market will be excited about that. They'll price that in now. But based on swap traders and their expectations, they don't think that the Fed is going to cut as aggressively in 2025. So that only means that the yield on the dollar is still going to be lucrative. So that means assets like gold are more than likely going to come down. We already know that the euro itself is going to keep coming down because of these tariffs that are going to come into play by Trump. But word on the street is that Trump says that the tariffs aren't as bad as they're being made out to be. So it's going to be a lot of touch and go with regards to these tariffs with Trump. So we're only going to know when Trump actually gets into power on the 20th of January. Okay. Now, going into what's going on in the marketplace for crypto, we've had a little bit of news. Larry's been buying Bitcoin, and he's been buying it as it's been going down. So just 2 billion Bitcoin in just 5 days. He bought 741 million Bitcoin just yesterday on a down day. Now, yesterday's down day wasn't really that much of a down day as such. We didn't really have that much volume in the sense where it was a problem. But just going into a bigger picture of it all, this is the 4-hour time frame as such. Yeah, don't worry about that. It's not the right price, but I'm looking at the way they dropped yesterday, and I can see that there was not really that much of a pressure to mark prices lower. Contracts were actually lower in terms of how many people were selling as such, but the bids were coming into play inside of these regions at the lows of each candlestick, which is then effectively getting me geared to the idea that they're getting ready to make a potential reversal or short-term move to the upside. Okay, now MicroStrategy apparently is going to pause on buying Bitcoin purchases in January. What? It says here, rumor is spreading that MicroStrategy may stop selling stocks and issuing convertible debt in January, cutting off its usual Bitcoin funding sources. If this happens, it says, it would leave many of its investors who rely on Michael Saylor's regular Bitcoin purchases disappointed. So could we be going into the idea that this pause in buying is weakness? Are they concerned about it? Is there an expectation that Bitcoin's price is going to come down? If we go over to Bitcoin's price right now, you can see it's doing very well at around the all-time high region. We don't need to travel too far to go and see Bitcoin's all-time high again, okay? Right now, it's currently sat at the 1 hour 50 EMA. We go to the daily time frame itself, and we haven't really seen any violations of the 5 and 13 EMA. We did see it happen last night, but they've now managed to recover that zone and get back up above the 5 EMA, which is this yellow line right here. So based on the way the markets are looking across the board, I mean, if we go over to the NASDAQ itself, you can see NASDAQ has got a gap right there, which can be a problem for us, which they could actually fill. And they've been trying to fill this gap quite a bit, if I'm honest with you. If you look, they've actually managed to take more than 50% of the gap itself, and they've left a little bit behind right here. Now, given with NASDAQ and its volatility, there is a good chance that it could come down to go back up again. But they're sort of leaving clues behind as to where they could actually end up later on in the session. And I'll say this to you all right now. Trading FOMC is a very difficult thing to do. You are effectively having to try and predict the likeliness of price going up and down in one instance. Don't waste your time. If you're already in risk and you've already got positions open, and you've got positions open from a long, far distance. So if you were long on Bitcoin at 90,000, you've really got nothing to worry about unless Bitcoin really starts to collapse. Something bad would have to be said in the FOMC projection statement. And of course, if the Fed were to turn around and increase interest rates or pause today, which is very unlikely that they do that, something bad would have to happen for them to really make that be the case. I mean, inflation would have to go up aggressively in the latest readings. And it hasn't gone up aggressively, but it's still within that 2 percentile region. So I wouldn't be too concerned about that if you are already in risk, but today could be a volatile day. But what could be more volatile is the fact that Bank of Japan's policy rate going into tomorrow will reveal where their stance is in regards to increasing the interest rate. Now, word on the street is that they're not looking at doing anything in tonight's update. So after the New York stream tonight, after the press conference this evening with the FOMC, will be waiting for the Bank of Japan's policy rate to come into play. Now, we go over to the dollar yen to understand that, because that's really a measure of how likely it's going to favor dollar yen or not. Now, as I said this before, Japanese yen is something you want to pay attention to, because that's going to tell us if yen traders or carry traders are borrowing yen and putting that yen to work by selling it and going over to dollars, which means the dollar dominance will be climbing up, which you can see right now. It's not doing anything. It's consolidating sideways. This could be consistent with consolidation to mark dollar higher. And if the dollar yen itself sustains itself and keeps on holding these highs, there is a possibility that dollar yen could come back up and retest these regions at 155, which will naturally encourage the Japanese to pay attention to it, because it doesn't serve them to have such a strong dollar against the yen. It devalues their currency, and it also forces their yield, their 10-year yield. So we go over to the 10-year yield on the yen. You can see it forces their yield to go up so that they can encourage investors to buy Japanese bonds, which you can see right here ain't doing too well, trading at significant lows. So when we put this story all together, okay, you've got to look at it like this. If JP Morgan's positions, okay, of their traders are going into treasuries, that's 10-year futures treasuries, there's an expectation that they expect the bonds to go up. If hedge managers are effectively covering shorts and getting rid of risk on shorting the bonds market, that could mean that there is an expectation for the 10-year bonds market to go up. That could also mean that there could be an expectation for the Japanese bond market to also go up as well, which could mean that the dollar itself could end up coming down, the euro could end up moving up, and the Japanese yen could effectively start marking up, which in principle could look like the carry trade unwind, okay? So for anyone that doesn't know, the carry trade is fundamentally you borrow an asset that's a low yielding asset. You can get more of it because it's cheap to obtain, which is the yen. You then sell that yen and put it into US dollars, and then put those dollars to work by going over and buying stocks, okay? That's what the carry trade is, okay? Now, if we make the assumption that they're going to go into the bonds, that means we could assume that investors are seeking safety. The Japanese yen is naturally a safe haven. Gold is also a safe haven, but it all depends on where we are with interest rates and the dollar. Because if you've got a really bad interest rate on the US dollar, naturally gold's price always excels and moves up. It works inversely to the interest rates on the US dollar. Why would I go and put my money in dollars when I can get appreciating asset like gold if the yield on the dollar is no good for me? So this is what I mean about going into the FOMC today, guys. You've got to really say to yourself, what is it that you are actually looking for from today? If you're looking for volatility, then you just got to wait for Jerome Powell to cough, and then something will happen in the market. But what we've all got to be looking out for is if his tone, if he suggests that we're going to continue with this path of rate cuts going into 2025, word on the street is that they're expecting, if he is hawkish today, then we're only probably going to get around 50 basis points in the new year, so 2025. Other traders are expecting a full point cut, okay? So that if after today, that would effectively bring the interest rate down to 3.5% in 2025. But because interest, or should I say inflation's not really doing what it needs to be doing, what's got investors a little bit concerned is, why is the Fed cutting if inflation is still going up? And that's the million-dollar question right now. It's like the bonds market is fighting the Fed. And we've got bond auctions, and we've just recently had the 20-year bond auction, which really, it did actually garner a little bit of interest in terms of the bid to cover ratio. So there is an expectation that the bonds are going to go up. And I mean, you can't say that it can't, because I mean, God, these bonds have been getting smacked. Okay. The yields themselves, 2-year is coming down. That's good news, which can mean that the stock market could be looking like it wants to make a move higher. Going into other assets that have been fueling the stock market, we go over to Tesla, and that thing just doesn't stop. Okay. Right now, we've got a gap down in the open of Tesla right here, which, come on, man, you can naturally expect it to be the case. NVIDIA ain't been doing too well, but she's also got a gap up, but that would be off the back of the idea that the yields are going down. So that's good news for tech stocks itself. And then you go into other assets like the heavyweights. You've got Google as well, and you got $195 itself. And I read a statistic yesterday that the market cap of the Magnificent Seven, okay, makes up 37% of the S&P's market cap. Are you actually serious? 7 stocks are contributing to the market cap, 33% of the market cap. That is absolutely wild. It's unbelievable. That tells you how much value is locked into the markets, okay? In other news, I've been mentioning crypto.com quite a bit, but there's a lot happening with crypto.com. Crypto.com's dropped its lawsuit against the SEC, obviously, because this guy, they got rid of Gary, and now Donald Trump's into play. Okay, so there's lots of things happening with crypto.com. I've mentioned it before. Their roadmap is looking pretty decent. And then, of course, you've got this. They've announced Mohammad Hakim to be president of the Dubai operations itself. So that's going to be really interesting to see how it's going to develop. And of course, with crypto.com, I think what you're going to see is any major events, like you've got the Super Bowl, you've got Formula One and what have you. These guys are going to be there, I think. They're going to be there advertising. I think they're just going to go all in. I think they would be the greatest competitor. I mean, tell me if I'm wrong. Give me your opinions. But I think crypto.com would be the successor of Binance. That's what I think, you know, because their roadmap is looking solid. You don't hear really any problems with crypto.com. You hear more problems about Coinbase than anything else, but then you really find out what's going on, and then it ends up being the end user as the issue. But I think crypto.com is looking very, very promising. We quickly go over to crypto.com's price action itself. We're going to get into a little bit of price action right now, guys. Let's have a look. Here we go. Let's just go and have a look at it from here. I mean, look, 19 cents. And when we look at the bigger picture of things, if you were to mark off on the daily, okay, if you were to mark off the events that have happened in crypto.com in terms of update of the roadmap, or they've introduced a new service, if you go into the crypto.com app itself and you go and look where you can stake your CRO, okay, look below at the certain level. So when you get the Obsidian card itself, you deposit $400,000, you get a benefit of X, Y, and Z. They're talking about stocks. It says coming soon. They've got various things that are happening very soon with crypto.com, okay? So as long as nothing dodgy happens, and given that they're out in the open with meeting Donald Trump and they're getting into bed with guys in Dubai as such, it looks like a promising thing with these guys. And it's just when you're looking for an asset to really do something and you're looking, everyone's asking the question, why are my alts bleeding? Why are my alts bleeding? Okay. Look at what's going on behind the alt. What reason does the alt have to go up? Forget the idea of Bitcoin dominance and all of that magic. Like, just say to yourself, what reason is the asset not going up? And if you can't find a reason for it to go up, maybe you might want to park that asset if you're going to be relying on the altcoin season, Bitcoin season story. Okay. But look what's going on with crypto.com. Like, there's things happening. So naturally that's going to be getting attention, and naturally that's going to be increasing its price as a rate of return for any of the investors. Okay, cool. Now, what we got going off here? Here we go. Let's have a look at Bitcoin right now. So Bitcoin on the daily time frame pretty much established that. Let's go to the 4-hour time frame on Bitcoin. Now, going into the FOMC itself, guys, we've got a lot of sideways activity. Tap in the 50 EMA. They've come back into the green vector candle recovery point right here. We've got an interesting point up here, which is the stop in volume candle right there. It is the all-time high. Going into the bids and the offers for Bitcoin itself, I've got a few orders up here. So earlier on, there was an order around 13 million. Oh no, it's changed. Here we go. It's actually 27 million now. Originally, it was around 13 million, but now that order's changed to 27 million offers. So I'm guessing the market's going to want a reason to really start buying Bitcoin, because these guys are going to want to sell Bitcoin. And we're seeing like a cluster of orders here that could suggest that Bitcoin's movement today could be marking up towards the FOMC. That's what that's the expectation that we would have. But what I'm concerned about is we seem to keep seeing these bids. These bids seem to be coming into play. They keep sweeping the bids and then they make a reversal from it. This sharp move up right here looks like a short covering. So people that have been going short on Bitcoin are trying to close those positions, and then prices ended up going up again from that point. So what we really need to see happening is we need to see Bitcoin really showing worth from this point to start marking higher. And you're going to get that today with the FOMC, but you also might only get sideways price action. You'll probably get very frustrated with Bitcoin because it probably will move sideways, okay? And when we get into FOMC itself, the expectation of volatility coming into play and the excitement of it is what will naturally lead Bitcoin's price to mark higher. I anticipate that we get movement, okay? But if the market's already pricing in the idea that maybe the Fed could be a little bit hawkish, I mean, this article here says that gold's upside attempts remain limited, okay? So you've got this story here that suggests to you that if the Fed is hawkish, that means if they're not going to cut as aggressively, that's probably going to be putting pressure on gold. That will put pressure on euro. That will also probably try and put pressure on Bitcoin. But then when you've got articles like this, people come to the chart and think, oh my God, Larry's buying. Well, so is Michael Saylor. But now he's pretty much said, no, we're going to slow it down a little bit. Why? You know, what's the reason? Looking for the reason. It says Saylor has a blackout period all of January, cannot issue any new converts to buy Bitcoin. So says here some investors think this is rumored pause is tied to insider trading rules, while the SEC doesn't outright forbid trading by insiders between a quarter's close and earnings announcements. Many companies impose their own blackout periods. Well, to be honest with you, Biden's trying to pass out a new law that prevents Congress from trading. So Nancy Pelosi ain't going to be making change anymore. So that's going to be a very interesting one if he actually gets it passed. Any questions, ladies and gentlemen? Listen, how many of you are new in today's live stream? How many of you are new? Because word is, right, that Bitcoin is going to try and claim the 115,000 end of year. 115,000 Bitcoin. Do you think that's going to be the case? I mean, looking at the price action itself, is it valid to assume that? Well, the best way for me to work out if that is going to be the case, if you go to the hybrid system, okay, go into the sessions and go down to the ADR. I'm going to just give you something on this right now so that you can, where's my ADR? Here we go. Where's my box? Where's my box? Show ADR, yeah. Where's my ADR box? Here we are. Show ADR in pips. Right, okay. So, I'll break it down for you right now so you can understand what I'm looking at. Here we go. So at the top right here, you might not be able to see it because it is a little bit small. Let me zoom in a little bit. Here we go. See that? It says ADR, 464,133 pips, okay? So that's the smallest change in price on Bitcoin. So when you see this 30 go to 31, that's the smallest change in price, okay? Well, let's just look at the live price right now. So 76, if that goes up or down, there you go, 75, that's the smallest change in price. So don't be thinking, oh my God, 464,000 points, well, dollars. No, it's not that. It's a change, the smallest change in price. So let me explain to you why the two, maybe the 115,000 could be on the cards for Bitcoin. So on average, it says here that Bitcoin on a weekly price point, okay, so the ADR, it's average daily range, means that if it's going to be moving upwards, it would move to the sum in total of around 1.392 million pips, okay? So 1,392,400 pips. That means if it moves up once, that would be around 400,000 pips, comes down, moves up again, 400,000, comes down, moves up again, 400,000. That would that will equal to the ADR times 3. So 3 times the ADR, okay? Which if you multiply 464,133 by 3, you're going to get the sum of around 1,392,400, okay? So let's make the assumption that the start of the week for Bitcoin was this range right here, okay? And we are expecting maybe 115,000 Bitcoin. Is it possible for it to do? So we go from this open right here, which is the actual ADR start of a new crypto trading week. And we go on the idea that from that open, we're going to move up 452,000 pips, okay? So there's the first move right there, 464. So let's go to there, right? Happy days. I'm going to copy that and move it up. So that's the second move, yeah? I'm going to copy it again and do the next move. So by that principle, if Bitcoin is going to follow the ADR for this week, it's already given me 1 times ADR because it's effectively moved up from this point to the upside, okay? Now it's contracted. So the logic says that we naturally expect Bitcoin to try and repeat this move to achieve 2 times ADR. So that this area here, in principle, should move Bitcoin up. So from the daily open, we would assume that it could actually move up 465,000 pips to the upside or 465,000 pips to the downside. Now you can see here that Bitcoin has dropped down and nearly taken more than the 50% of the ADR of the day's range. So we've had volatility, okay? If Bitcoin can get above the daily open, the logic would say that this would be its likely journey if it can achieve a full ADR move to the upside, okay? That's what we could make the assumption of, right? But that's not what's happened. You've seen it's actually gone down from this daily open, and now it's going to try and recover back up in principle. But based on the logic of going to 115,000, that would be sound on the logic of the math behind the average daily range. That would then take Bitcoin's move towards $114,741 if Bitcoin is in line with its ADR for the week. So we've already had 1 times ADR. We've had the 464,000 pip move. And that finished, in principle, from the open of the weekend, that finished at 105,423. Okay? The next move would finish at 110,086. That's when the next move would finish. The final move would finish at 114,000 based on the ADR. So in other words, if we're trending, that logic there aligns you mathematically on the average of the way Bitcoin behaves. So if we're trending upwards, you would have an expectation that from the start of the week towards the end of the week, principally, Bitcoin should finish at 114,000 on the idea that volatility is coming in and prices just keep on going up. You take all the information about crypto that's been coming out, Larry's buying, Saylor's buying, everyone's buying, FOMC, and you put that to the logic of the average daily range and say, how likely is price going to really mimic what's going on behind the scenes with crypto? We're in terms of the accumulation of Bitcoin by the big players. So we go over to the ETF itself and see if the balance has actually adjusted. It was at 534,000. And we look right now at this dead blank screen. Here we go. And we can see that it's coming in at 534,000. So they haven't been selling, but they've effectively been accumulating. Okay. So that, in my opinion, guys, is a good way of working out how likely Bitcoin's going to make a move. All right. So if you're a holder and you're trying to work out how likely is Bitcoin going to move from one point to the next, well, using the ADR is going to help you understand if the move to the upside. So if it achieves its first ADR, you would have an expectation that if the trend is favoring higher prices, that the next ADR is going to be achieved. And if you think that it's going to slow down a little bit and you won't achieve the full ADR move of 3 times that amount, then you'll say, you know what, I'm going to start taking profits. So it's a good way of really working out how likely Bitcoin is going to move to the upside. Okay. How you doing? Good morning, land of the mystery drones. It is good time to sell a gold coin and buy Bitcoin with it. It sounds it's like gold will go down. Gold, listen, gold, in my opinion, is not going to go down. Why? Because we're on a new path with the Federal Reserve. Okay? Because we're in a different fiscal path in the sense where we're cutting interest rates, the yield on the dollar is naturally going to be coming down. Okay? And if the expectation for gold, or should I say, if the expectation of interest rates is at 3.35%, okay, in 2025, on the premise that we do get a full 1% basis point cut, okay, if we do get the 1 point cut, that would take interest rates down to 3.5% in principle. That naturally means investors' yield on the dollar is no good, so they're going to naturally lead into gold, and that is where gold's going to naturally increase in value, okay? Crypto Carlos, how you doing? Okay, would like to know if this is an option to profit in case of a correction in Q1. Would like to start building a swing position, but unsure when to start buying. Mad love. Can you please check SMST ETF? Give me a second and I'll try and pull that up for you right now. What's going on? So Ethereum, Bitcoin making nice little moves. Okay. SMST. Here we go. Oops. I just had it. Let's have a look at what this is saying. Where is it? Come on. Search. All right, here we go. Short MicroStrategy. Again, it all depends on how the market reacts, because if MicroStrategy is not going to be buying any more Bitcoin, then again, the reasoning for it could lead investors to sell. It could. So it could be an option for you to take advantage of, given that it is seeing quite a bit of volume coming into play with this, but it's not enough data on it, you know, to really say it's going to generate you a good return. You're really relying on the idea of MicroStrategy. Yeah, it's one of those ones, really. Very interesting one, to be fair, mate. But if you're going to be playing ETFs, I'd be looking at whether ETFs themselves in the bonds market are going to be going up. Bond ETFs increasing in value. That's what you want to be looking at, like the TLTs and what have you, and the Vanguard bonds. If they're going into that, then I would be very cautious going into high-risk assets, in other words. Okay. TM, when can we see 1 million on the like button? Oh, that would be nice. Okay. Hey, T, any suggestion on how to use vector candle system on high time frames now that we're on a price discovery in order to maybe anticipate a local top or the top? Okay, then. So the way to use the hybrid system on higher time frames, okay, is to make reference to vectors that are close by. Now, you can see here on the daily, we don't have any vectors that are close by other than this red vector candle right here. And that would fundamentally be a spot where you would pay attention to Bitcoin. However, when you go down into half the time, in principle, go to the 12-hour chart, you then say to yourself, have I got any vectors inside? You've got one vector candle right here. And then you've got this block right here, which makes up that stopping volume candle on the daily time frame. What you're looking for, in principle, is you're looking for price to balance between the top side of this block for longs, in principle. Or if you're playing spot, you want to be looking for Bitcoin to hold inside of this range right here at 103.791 to suggest the idea that they're going to be holding that point for Bitcoin to then make a markup in the future. Okay? So that's what you really want to be saying to yourself. You want to say, okay, is it likely that it's going to hold that point? And if it holds that point for a period of time, then you'd be doing spot entries inside of this range with the idea that Bitcoin's going to sustain this range to try and claim out the all-time high again. Okay? So just look left to see where are the closest vectors and then trade on that logic. And then if it's working in favor and we do see price continuing higher, then these points right here will be where Bitcoin bounces from to then try and make the recovery back up. Okay? What do you think of Apple 290? Let's have a look at Apple for a split second. I mean, look, this is Apple right now. And look, value is just absolutely crazy. I think what we've got to take into consideration is if the FOMC comes out hawkish, it's going to be not good for tech. All right. Or Apple could come back down. There could be some corrective move on the to the downside for Apple. I mean, smart money, dumb money principles themselves. Here we are, not the stock bond ratio. Here we go. I mean, the name exposure index, that is still trading at significant highs. So money managers are getting really active. Crypto fear greed index is still high. And then, of course, stock bond ratio is still high. And then we've got this smart money, dumb money. Yeah, so the smart money is effectively selling because this line is going up right now. Okay, so they're buying. And look, retail right there. Retail is getting rid of their stock because price is going down. So that is where smart money principle is going to start the buying process, where they start scaling into positions, DCAs and what have you, on the premise it's going to continue back up later on. Okay. Here we go. So what we got? Bitcoin. Let's just quickly go over to the 1 hour time frame and have a look at where we are right there. Okay, so it's not doing too bad. Not to worry too much about it, but never mind. Anyways, listen. Make sure that you subscribe on the way out. We'll be going live tonight around 6:30 p.m. I will send you guys a notification, so make sure that you're subscribed to the channel because I'll be doing a community post to let you guys know we'll be going live very shortly, just to give you guys a bit of time. And then we'll be going live in anticipation of the FOMC. All right? Make sure you bring coffee along, guys. And some cough medicine as well for good old pal. All right? With that being said, guys, mad love and respect. Hit the like button on the way out, and I'll be speaking to you all in about 3 hours' time. Take care of yourselves, gang. Peace.